Hello everyone. We'll continue with our paper. This is for LCCI Level 3 Financial Accounting. This is our 22nd set of paper. Today we are going to look at the paper for November year 2017. Again, 100 marks, 5 compulsory questions. Let's start. Okay, so first we have some errors. Okay, and then some information for the year end, September 30th, year 2017. Okay, we have extended trial balance, 19 marks. Okay, two purposes of trial balance again. Okay, so trial balance. Okay, so first, it helps to check the arithmetical accuracy of the accounts. Okay, check whether the totals of the debit side is equal to the total of the credit side. Okay, and to assist preparation of financial statements. Okay, and then we have the workings directly here. Okay, and then 17 marks. Okay, for the adjustments. Okay, again we have to fill in the total at the end of the question. Okay, so let's see what we are given. Tammy runs a business and provides the following information. She identified the following errors. The bank balance of 2150 was incorrectly treated as an overdraft. Okay, so the balance is incorrect. From 2150, now it is an overdraft. Okay, so the difference is 4300. Okay, we can see cash at bank 215. Oh, let me see again. Oh, okay. So the correct amount is a positive balance. It was treated as an overdraft. Okay, so it should go back to the debit side. So what we are going to do is to debit 4300, cancel the credit balance and then put it back to the debit. Okay, and because of this error, there will be a suspense entry for 4300. Okay, so first one done, and then second one. Credit sales 570 was recorded as 750 in the sales day book. Okay, so 570 and 750, it is overstated by 180. Okay, so we should reduce the amount because it is overstated. Okay, go to the sales account first, revenue. Okay, revenue is in the credit side, so if we want to reduce it, we go to the debit side of the adjustment for revenue. Okay, and then because it is an error of original entry, okay, if we incorrectly entered into the sales day book, then the trade and other receivables will also be incorrect. Okay, 180 here. Okay, so item 2 done. Item 3. During the year, Tammy used her own money to purchase inventory costing 950. This has been recorded correctly in the purchases account, but no other entry has been made. Okay, if we have purchases of inventory using the own money of the owner, of the sole trader, then it should go into the purchases account and also to capital account credit. Okay, but then the credit entry is omitted. Okay, so 950 go to equity 950. Okay, and then suspense 950 here. Okay, item 3 done. Item 4. At year end, an allowance for doubtful debt was to be decreased by 150. allowance for doubtful debt given to you directly. So allowance for doubtful debt is in the credit side. If we want to reduce it, 150 in the debit side. Okay, and also because there is a decrease, actually we have an other income. So allowance for doubtful debt adjustment, 150 in the credit side. Okay, so item 4 done. Item 5, insurance 400 prepaid, wages and salary 375 accrued. Okay, we'll do these two items together. Okay, insurance prepaid, wages and salaries accrued. Okay, so go to insurance. Okay, it is prepaid. Insurance is in the debit side. When we have prepayment, then we have to reduce the amount. Okay, so 400 here, and it goes to trade and other receivables, 400. Okay, and then wages and salary. Okay, we have an accrual. Okay, for accrual we add, so 375, and then go to trade and other payables, 375. Okay, so items 5 and 6 done. Let us go to item 7. General expenses included a payment of 1250 for Tammy's holiday. Okay, so I guess it means that these items are not adjusted. Okay, 1250 from general expenses. So it is drawings, not general expenses. So let's go to general expenses. Okay, it's in the debit side. If we want to reduce it, credit. Okay, it does not belong to general expenses. It belongs to drawings, 1250. Okay, this one done. Last item. A debt of 350 previously written off was recovered. This had not been accounted for. Okay, so we have an irrecoverable debt recovered, previously written off, so it is not in the same year. Okay, so this 350 should be in a separate income account. Okay, and a receipt. Okay, so irrecoverable debt recovered, 350. Okay, and also for the receipt of money, it goes to the bank. Okay, and you can see in the where is it, cash at bank. So here there is an already an entry of 4,300. Okay, we have to add 375. Is it 350? 350. So it would be 34650. Okay, so now it is done. Let us see first of all whether the suspense balance is settled. Okay, so we have 3350 at 950 minus 4300. Yes, it is gone. Okay, then we balance our adjustment columns. Seven, 9, 5, 5. Yes. Okay, 17 marks. Okay, not difficult, not too difficult. Okay, it's normal thing. Okay, so question 1 done. Okay, and I forgot to write it is extended trial balance even, and then we finish it. Okay, so let's go to the second question. Second question is partnership. Gavin and Hannah were in partnership. On the 30th of September, the following balances were extracted. Okay, so these are the opening balances for capital account of Gavin and Hannah, current account of the two partners, and then we have a debit balance for Hannah. The partnership agreement provided for sharing profit and losses in a ratio of 2:1, interest on capital to be paid 8%, and then Hannah received a salary of 1200. On the 1st of October, year 2016, that is 1 year afterwards, Indy joined the partnership, introducing 50,000 by check. They agreed that profit and losses should be shared equally, and there were no other changes in agreement. Okay, so still 8% per annum, and then Hannah received 12% for salary. Okay, non-current asset were revalued. The profit on revaluation 45,000. Goodwill revalued at 30,000. The partners decided not to retain goodwill. For the year ended 30th September year 2017, the profit 72,000. So I guess first of all we have to prepare the appropriation account for the year of operation, 4 marks only, and then the current account of Hannah, capital account of Gavin. Okay, 5 and 6 marks. Okay, no more. Oh, why? Okay, so we do not have to deal with Indy. Okay, anyway. Okay, so first we have profit for the year, and then appropriations. And then first of all we have salary, we have interest on capital, okay, we have Hannah, Gavin, and Hannah. Oh, no H. Okay, and then profit available for distribution, and then share of profit. Okay, 2:1 for Gavin and Hannah. Okay, so the profit 72,000, and then 8%, 50,000 multiplied by 8%, we have 4,000 of the interest on capital. Okay, so let us see, and then 2:1. Okay, quite short. 72,000, 12,000 for Hannah. Okay, 4,000, 4,000. Okay, together we have 8,000. Oops. Okay, so 72 minus 12 minus 8, we have 52,000. Is it? Let me see. Okay, what happened here? Year 2016. Oh, that is. Oh, sorry. That is for. Oh, I almost misread it. Okay, because we have. This is year end. Okay, this is year start. Okay, I thought it is already 1 year afterwards. Okay, so sorry about that. Okay, let me erase and let me do it again. Okay, and we have who? Indy. Okay, that means we have to calculate the change in the profit, the change in capital. Okay, so Gavin originally 50,000, Hannah 50,000. Okay, and then we have the profit for revaluation being divided by 3, okay, being 30,000, and then 15,000 for revaluation, okay, and then goodwill plus 30,000, that means 20,000 goodwill, 10,000 for Hana. Okay, Indy has brought in 50,000. Okay, and then we will have goodwill written off. Goodwill written off. Okay, 30,000 divided by the 3 people. Okay, so we have minus 100, 10,000, 10,000, and then 10,000. Yes, this is after 1 year. Okay, what happened is we have to calculate the interest on capital of Gavin, Hannah, and Indy. Okay, so there are things that I would like to say later. Okay, I want to focus on the calculation first. So let us calculate the capital of the 3 partners. Okay, after everything happened. Okay, so 50 plus 30 plus 20 minus 10, we have 90,000 capital for Gavin. Yes. Okay, and then for Hannah, 50, 15, 10 minus 10, okay, 65,000. And then 40,000. Okay, that means 90,000, 8% interest, that would be 7,200. Okay, 655,200. Okay, 3,200, 725,232. Okay. So 7,200,5200,3200. Okay, that will give you 15600 negative. Okay, I do not know if we can share. Oops. 44400. Let me calculate it again. 72,000 minus 12,000 minus 156,000. 15600, 444. Yes. Okay, then it can be shared. Okay, good. This is profit available for distribution. Okay, and then share of profit. Okay, they are going to share the profit equally. So Gavin, Hannah, and Indy. Okay, divided by 3, we have 14800. Okay, so I think it is bad news for you. Okay, because in the question, okay, it sets 8% interest on capital. Okay, and at year start, that is 1st of October, year 2016, there is the change of partnership, introducing Indy as one of the partner, and then the partnership capital change because of the capital introduced because of the revaluation, because of goodwill adjustment. Okay, just like what we did in this calculation. Okay, the bad news is, okay, in this appropriations account, the mark scheme give 4,000 for all three partners interest on capital. That would be based on a capital of 50,000. Okay, you can see where is 50,000. Okay, where does this comes from? This is the opening account, opening capital account, and the initial investment of the partners. Okay, but then that is not how it should be, because at the start of this new partnership with three partners, okay, the capital is no longer 50,000, it is 90, 65, and 40,000. Okay, why does it use the incorrect balance, the non-updated balance? Okay, why? I don't know why. Okay, it's not reasonable. Okay, anyway, I think this is how it should be. Okay, unless you say that, okay, from the information given, you are told that it is out of the opening balance of capital before adjustment. Okay, if that is the case, then it is still possible, but I do not like it, because at the start of the year, that is the introduction of the new partners. Okay, everything should be fixed, firm, and then the new capital should be taken into account when you calculate the interest on capital, because it happened on the first day of the year. Okay, you should not ignore the whole thing and then just use 50,000. Okay, anyway, let us continue. Okay, for current account, we have to prepare for this year for HANA. Okay, so if our appropriation is different from the mark scheme, okay, the current account will also be. Okay, anyway, okay, we will focus on what is correct, just like we always do. Okay, so current account of HANA, we have an opening balance in the debit side. Okay, that is year 2016, 1st of October, balance brought down. We have opening balance of 2,500. $2,500 here. Okay, and during the year, we have year 2017, 30th of September, we have in the appropriation account 3 items of appropriations. Okay, one is salary. Okay, and then we have interest on capital. We also have share of profit. Okay, being 12,000, and then 5200, and then 14800. Okay, there is no drawings. Okay, no drawings are present. Okay, nothing here. Okay, if there's nothing, then we continue. Okay, so 12,000, 5,200, 14,800 minus 2,500. We have 2,950 closing balance. Okay, again, it would be a little bit different from the answer key from the mark scheme, because our interest on capital is different and because our appropriation is different. 29500. Okay. 29500. Balance brought down year 2017, 1st of October. Okay, next we have the capital account of Gavin, we have already calculated. Prepare a capital account on the 30th of September and ended this date. Okay. So again, it starts at year 2016, 1st of October, we have a balance brought down of 550,000. Okay, this time it is for Gavin. Okay, so on the same date, we have the revaluation gain. Okay, and give you 30,000 profit. Okay, and also the goodwill adjustment, the creation of goodwill 20,000. Okay, and then here 1st of October, goodwill again. For the goodwill written off, we have 10,000 shared equally. Okay, and then 90 as the closing balance, just like what we have calculated. Carry down. We have year 2017, 30th of September. Okay, and then of course the closing balance 90,000. Okay, done. Let us continue. State 2 disadvantages of a partner for a partner of being in a partnership. Okay, of course the unlimited liability. Okay, and also sometimes you have disagreement or argument. Okay, or share of control. State 2 reasons why a partner may have a debit balance on their current account. Okay, it is also possible that the partnership made a loss, so the partners have to share it. Okay, also possible that they are taking out too much drawings. Okay, the account is overdrawn. The drawings is greater than the appropriations, the profit shared to the partners, and the other appropriations given to the partners. State 2 principles of professional ethics. Okay, we have a lot of different ones. Okay, so I'll say confidentiality. Okay, and make sure you know how to spell. Okay, objectivity, professional competence and due care. Okay, professional behavior, integrity. Okay, all these can be. Okay, so 21 marks for this question. Okay, let us continue with question 3. Question 3, we have different things, okay, given to us from the information after preparing the draft statement of profit or loss. Okay, so the draft profit calculated is 25375, and we have some other adjustment to make. Okay, and to calculate the correct value of inventory, calculate the adjusted profit, 2 marks, 4 marks, and then the statement of financial position. Okay, and then some other explanation questions. So I would say it is let me take one more look. Okay, Sole Trader. Sole Trader. Okay, so inventory, and then what? And then the updated amount of profit. Okay, so inventory valued at 50,000 included damaged goods 6250 that can only be sold at 42% of their cost. Okay, so costing 6250, and then it can only be sold at 42%. That means it is reduced to 2625. Is it? Okay, then the difference 6250, the difference is 3625. Okay, so this is the the balance. Okay, and the decrease is 3625. Let us calculate one more time. 6250. We calculate the decrease directly. That means there is a decrease of 58%. Yes. Okay, so 50,000 minus 3625. Okay, let's see if we are given any other information. No. Okay, so it will be 46375. The next one is to calculate the adjusted profit. The original profit is 25375. Okay, just now we have an adjustment. The inventory is adjusted downwards. So 3625 is here. Okay, when inventory is adjusted downwards, profit also goes down. Next, allowance for doubtful debt to be created, 5% of trade payables. Trade payables being 42500, 5% of it will be 2125. Interest on the bank loan that was taken out on the 1st of April. Now, our year end is on the 30th of June, year 2017. That is from April, May, June. Okay, 3 months. Okay, so let's see. We have 6% bank loan, 20,000 multiplied by 6%. Okay, 1200. Accrued for 3 months. Okay, so it is 3/12. Okay, that is 300. Okay, that will be your interest as well as your other payables. Okay, because it says it will be paid on the 15th of July. Okay, 300. So 2125 for allowance for irrecoverable debt, 300 for interest, minus 2125 minus 300. Okay, because for accrual, if we have more accrual, we have more expenses, we have less profit. Okay, so 25375 minus this one minus 2125 minus 300. That will give you 19325. 19325. Okay, done. After question B, we continue for the preparation of financial statements. Okay. Statement of financial position. Okay, I will use three lines. Okay, we are given, let me see, the cost and accumulated depreciation for both land and buildings and motor vehicles. So here, the cost, the accumulated depreciation, and also carrying value. Okay, so assets, non-current assets. Okay, and then we have land and buildings. motor vehicles. Total non-current assets. Okay, so we have 100, 25, 35, 29. Okay, 100,000, 25,000, that will give you 75. Okay, and then motor vehicles, 35, 29. Okay, that will give you 6,000. So 8,100. Okay, so inventory we have already calculated to be 46375, 46375, and then we have 42500 as the trade receivables, 2125. Okay, and then and then cash as well, 1625. Okay, I cannot remember so many items, so let us split this. 2125. Inventory 46375. Trade receivables 42500. Okay, we have cash at bank, cash in hand. You can also write cash and cash equivalent. Okay, and it is 1625. 1625. Okay, the three added together, 1625, 40375, 46375. Okay, that will give you total of 88375 plus 96475. Okay, good. Total assets. Okay, equity. Can we calculate opening equity, or it is given to us? Yes. Okay, 75,000. Opening equity 75,000. And profit for the year. Okay, so our profit calculated is 19325. Any drawings? Let's see. Drawings not given to us. Okay, so there is none. Nine, 4, 3, 2, 5. Okay, next we have non-current, we have liabilities first. We have a loan. Okay, so let's see. Okay, the loan is 20,000. Okay, year 2020, so long term, non-current. Okay, and for current liabilities, we have a few things. First of all, trade payables, other payables, and then we have trade and other payables, and then we have the bank overdraft. Okay, so non-current asset 20,000. Okay, current assets, sorry, liabilities. First of all, we have trade payables, other payables, trade and other payables. Okay, trade payables 47250, and then 300 for interest. 47250, 300. Okay, added together we have 47550. Again, and then next we have a bank overdraft. I think that's it, and we can calculate whether it is balanced or not. Okay, so bank overdraft 7,500. Seven, 5, 0. Seems it is not okay. 4, 7. Oh, I know why. Because this one is not 81,000. It is 81,000. Okay, 81 plus 337. One six 169,375. Okay, again. Okay, done. So this is the statement of financial position of this business. Okay, so after this, we still have some questions to answer. Explain why John has applied the prudence concept in the preparation of financial statements. Okay, so the prudence concept, we have to explain it. Okay, not overstate income and asset, and not to understate expenses or losses and liability. Okay, and in this question we have created the allowance for doubtful debt. Okay, that is because we know that from previous information, some of the customers will not repay us. Okay, there is a possible loss. That's why we have to create the allowance for doubtful debt. State one stakeholder debt and their interests. Okay, stakeholders always. Okay, I like to state employees. Okay, because they want to see if their job is secured. Okay, whether there is possibility of pay rise. Okay, so question 3 done. After we are back from the break, okay, we will look at this question. This is single entry. Yeah, single entry, and then explanation, evaluation questions, and then yes, statement of profit and loss, evaluation, and then we have statement of that is a non-current asset register. We have been dealing with one of these registers. Okay, and then statement of cash flows, reconciliation, and then some explanation questions. Okay, so good. Okay, now we'll have a break, and then after we come back, we will continue with question 4 and 5. Okay, let us continue. Okay, this is for single entry. Okay, so we need to calculate cash sales, total purchases, and then a statement of profit or loss. Okay, and then some other evaluation questions. Let's see what is given to us. Okay, so Ming does not keep complete accounting records. She provided the following information for the year ended 30th of June. Okay, June, and the closing balance is in the left hand side. We have to be careful. Open and closing balances of inventory, trade payables, trade receivables. Bank summary, we have the receipts and payments. Okay, for receipts, 8% bank loan. Okay, is it new? Not a new business. Okay, 8% bank loan. Okay, and receipts banked. Okay, that is 65,000. Okay, and then payment. We have bank loan repayments of 12,000. Okay, we have borrowed more bank loan as well as payment. Okay, and then carriage in, carriage out. Drawings. General expenses. Plant and machinery. Rent and rates. Trade payables. Ming banked all the receipts except for the following. Okay, but then we also have trade receivables. Okay. So we have purchases, cash purchases, general expenses at here 825. Cleaners wages. Okay, 975. Rent and rates at 2450 here. Receipts banked include the sale of machine at its carrying value of 5,000 and receipt from credit customers. $58,000. Okay, the two added together will be 5,058. That would be 63,000. Okay, but then we have 65,000 here. That means we have 2,000 cash sales banked. Okay, but then here we still have 1200, 825, 975, 2450. These 5450 is unbanked revenue. So our first item we have to calculate cash sales. I would say we have this one, 5450. Okay, that is 7450 for unbanked revenue. For cash sales. Okay, so we have this one, 5450 unbanked revenue plus 2,000, that is 65,000 minus what? 58 minus 5,000. Okay, that would give cash sales of 7450. Total sales. Okay, total sales, and we have to calculate cash sales 7450 plus 58,000 receipt from trade receivables. Okay, and then these are receipts. Okay, and then we have the trade receivables opening and closing balance, 29575 for opening, 38495 for closing. Okay, so for this we have to reduce the amount of opening balance, because these are amounts that we receive, but then it is for last year's sales, plus closing. These are sales of the current year not yet received. Okay, so 7450 plus this one minus 2 plus 38495. Okay, that will give a total of 74370. Let us calculate again. 58000. Okay, later, or we see if there's anything else that we need to adjust. Okay, yes, because there is irrecoverable debt. Okay, then we have to add irrecoverable debt as well. Yes, irrecoverable debt at 525, is it? Let's check again. 525, yes. Is equal to, okay, again, plus 58000 minus 29575 38495 plus 525 74895. Okay, let me check again. Yes. Total sales. Okay, so please wait. Okay, I'm sorry. Okay, I just have a work call. Okay, so after total sales, we will continue with the total purchases. Okay, so total purchases, we have trade payables. Okay, 27850. Okay, and then also the trade payables adjustment. Okay, and cash purchases 1,200. Okay, so let us put it here. Cash purchases 1,200 plus credit purchases will start from the figure for the payment for payment to trade payables. Okay, and then we will adjust. Okay, the opening and closing balance, again 12750 negative, opening and then closing 19950. Okay, there is no other adjustment, I think. Okay, so 12750 opening plus closing 19950 closing. Okay, let me see if the answer is correct. Minus 12750, 19950. Okay, that is 36250. Okay, total purchases. Okay, now we'll move on to we'll move on to the statement of profit or loss. Okay, we have, first of all, the revenue, and then less cost of sales, and then opening inventory and purchases. I remember we have carriage in, and then less closing inventory. Okay, we will continue with the expenses later because we still have some more items. Okay, and then gross profit. Okay, so purchases 36250, and then revenue, the total sales 74895. 74895. Okay, we have opening and closing inventory 4850, 5645 closing. Okay, and then also carriage in 775. Okay, yes. Opening 4850, closing 5645, 775 for carriage in. Okay, we have 36230. Okay, 38665. Okay, then let us go to the expenses. Okay, there is no other income. Oops. Okay, let's take a look. For expenses, okay, let me use red to circle it. Okay, these things are done. Okay, loan repayment is not. Okay, bank loan was taken out on the 1st of October. Okay, that means we don't have to deal with this, but then 1st of October year 2016. Okay, that is how many months? Okay, our year start is 1st of January, so October, November, December, and then from January to June, that is 9 months of interest. So let us calculate 30,000 multiplied by 8%, 9 months. That will give you 1,800 as the interest. Okay, so first thing 1,800. Okay, there is no disposal gain loss because the machine is sold at its carrying value of 5,000. Irrecoverable debt 525. Depreciation given to you directly 10,000. Okay, and then carriage out general expenses, rent and rates. Okay, and then the cleaner's wages. Okay, 1, 2, 3, 4, 5, 6, 7. 7 things. Okay, so let us write the names first. Okay, we have irrecoverable debts. Okay, depreciation, interest. We have the cleaners wages. Okay, what else? Carriage out general expenses, rent and rates. Carriage out general expenses, rent and rates. Okay, so let me fill in the things that I remember. 10,000 for depreciation given to you directly, 1,800 for interest. Irrecoverable debt, I remember it is okay, I don't remember. Let us check. Okay, irrecoverable debt 525, cleaners wages 975, and carriage out 1950. Okay, so let us put in these few things first. Irrecoverable debt 525, cleaners wages 975, 1950, carriage out. Okay, general expenses and rent and rates. Okay, we need adjustment. So 5325. And then let me see, 75325. 7200. Yes. Okay. So 5325. 7200. Okay, let's look at the net profit or loss. Okay, I think it is still profit. Okay, so let me write it first. Profit for the year. Okay, plus 7,200, 950, 975, 1800, 10,000, 525, 27775, 10890. Okay, so that is quite neat. Okay, I think the most challenging part is to find the cash sales. Okay, so next, Ming is concerned about the financial stability of 2 of her suppliers. Okay, these are suppliers, so we are concerning whether they can continue to provide goods to us, the stability, okay, of the provision of goods. Okay, we are the customers interested in looking at that. Okay, so she obtained the following information for the last year. Okay, what we need to do is evaluate the performance of the business to decide which business Ming should continue to use. Okay, so choosing one, okay, which is more stable. Let us see. Gross profit margin, wine is better. Profit for the year, better. Current ratio, but then for current ratio, X is better. Okay, and especially for Wayne, the current the quick ratio is 0.4 to 1. It is very dangerous. Okay, so I think we should say for the profitability, it is much better for Wing, but then when we look at the financial stability, the current ratio, the liquidity is a very important aspect of it. Okay, because if they are going to continue to be in business, they have to be able to buy goods from their own suppliers, okay, so that we as the customers can have goods to order. The our suppliers should have the goods that we want to order. Okay, so I think we will write on profitability and liquidity, of course. Okay, but then the conclusion, okay, I would prefer X Limited more. Okay, so this is for this part. And then later we still have part D, state one other accounting ratio that Main could use to assess the financial stability of both businesses. Okay, I would say, of course, we have other ratios like ROCE, but then for this one, I would say, how about the trade receivables collection period and also the trade payables settlement period? Okay, how well these suppliers are paying their own suppliers. Okay, because if they are able to pay, then that means they are able to get the goods that we need. Okay, so 22 marks for question 4. Let us move on to question 5. Question 5. We have to prepare the non-current asset register, okay, for Sonox, Monox, and Zunox. Okay, anyway, okay, that is so bad. Okay, let's take a look. This company, Morley Limited, provided for information. During the year, Monox machine was sold for 18275 as a trade-in allowance for a new machine, Sonos, costing 35,000. The balance was paid by check. Okay, depreciation on machinery is charged at 10% diminishing balance method. Full year depreciation is charged in the year of purchase, none in the year of disposal. Okay, we need it until here. Okay, so the machine was sold for this amount. Okay, this is needed later for the calculation of the statement of cash flows, okay, for its disposal gain or loss. Okay, but then here we don't need it. Okay, 10% reducing balance method and a new machine, 35,000. So let us take a look. Okay, this 35,000 is the important aspect. Okay, so the first machine, okay, is purchased for 70,000. Okay, and then depreciate for 1 year, second year, and then now it is in the third year. So 56700, 10% will be 56770. Okay, the carrying value 56700 minus this amount. Okay, 51030. Okay, finish for Sonox. Okay, so how about the next one? Okay, it is sold on the 30th of June. Okay, given to you the proceeds here, the disposal gain loss. Okay, we compare this one with this one. So it is 18275 minus 20250. We have 1975 disposal loss. Okay, next. Okay, we have 10% reducing balance method, 35,000. Okay, so 3,500. Okay, and then 31500. So what we need for our next part is, of course, the disposal loss as well as the depreciation. Total depreciation for the current year, these two added together, 5670 and then 3,500. That would be 9170. Okay, total depreciation charge for the current year. Discuss whether Morley should continue to use the diminishing balance method of depreciation or change to straight line for machinery. Okay, so this part, we have to think about a change. Okay, whether it is okay for a change. Okay, so is it good to use diminishing balance method? First of all, I think when we look at the machine, it is okay for you to use diminishing balance method, okay, because maybe in the first few years you will use it more, okay, so it will be depreciated more. Okay, when your machine lose value quickly, in early years, okay, it would be okay to use reducing balance method. Okay, and when you use it more frequently, okay, that is, okay, you enjoy the economic benefit more in the early years, of course, reducing balance method. Okay, how about for straight line? Straight line is if it is for uniform use, okay, then it is good. Okay, I would prefer not to say it is easier to calculate, okay, because this is not our primary consideration, whether it's easy or not. Depreciation method is not difficult. Okay, so one thing I would have to say is that if you have to change from reducing balance method to straight line, it is actually a violation of consistency concept, okay, which requires you to keep the same accounting treatment through different years, okay, for similar types of assets. Okay, and if it violates, if you have no good reason to change, then you should not change. Okay, so the conclusion can be like that. Okay, no good reason, then don't change. Okay, so the only thing that I am not too happy with using reducing balance method is it used 10% reducing balance method. Okay, that means in later years the depreciation will be quite small. Okay, you need a lot of years to depreciate it to a value that is close to zero. Okay, take too long. Okay, and then this might not be reasonable. I mean the percentage, okay, may not be close to the reality. Okay, you may also mention that. Okay, so next, state the accounting concept that requires business to charge depreciation on non-current asset. Okay, that would be the accrual concept. Okay, and also possible for prudence, but accrual will be better. Okay, because when you purchase the non-current asset, you pay the money, but then you do not use it directly immediately in that year. Okay, you use it for several years. That's why you have to assign part of the cost to different years because of the use. Okay, so next you have the preparation of the reconciliation of profit to operating activity. Are you given the profit? I guess so. Okay, so let's see. Profit for the year. Okay, you are not given directly the profit, but then you are given retained earnings. Then you have to assume there is no dividend. Okay, and you are not told that there is no dividend. So 46820 minus 39475, we have 25345 as the difference. Okay, and you can use it as the profit. Okay, so let us calculate for inventory. There is a decrease. 33435 minus 2650, 6685. Trade receivables 89640. You have an increase of 14290. Trade payables 102500. Increase of 6750. Okay, so 25345, 25345. Okay, you have the profit for the year, and then add depreciation, add disposal loss, and then add decrease in inventory less increase in trade receivables and increase in trade payables. Okay, I think it would be a net cash inflow. Let us see if I'm correct. Operating activities. Okay. Whew. So, depreciation 9170, and then disposal loss 1975. Depreciation 9170, disposal loss 1975. And then the changes in working capital 66585, 14290, 6750, 6750, 6685, 14290. Okay, so let us calculate. Oops, 1975. Three, 5, 6, 3, 5 positive. Okay, so next, the financial activities section of the statement of cash flow is used to demonstrate how finance is raised and used in the business. Explain how the investing activities section of a statement of cash flow is used. Okay, so we can use the format given here. Okay, so it is used to show how much is used. Okay, you can say how much cash is used for investment in non-current assets okay, and sometimes okay also for external investment okay, and how much is received from the sale of non-current asset. Or external investment. Okay, because in this level 3 financial accounting, you are not asked about investment in other companies, okay, the cash inflow and cash outflow. But I remember, okay, you are also asked one time about investment income. Investment income will also go into your investing activities as positive because you receive return from your investment made. Okay, 2 marks. Okay, you just explain, and you can also say how much net cash is used, okay, or is received from investing activities. Okay, that is the general use of it. Okay, but then I think to explain more clearly what does it mean by the net cash, then you should use the 2 sides, just like here, how finance is raised and how these fundings are used in the business. Okay, for example, for dividend paid. Okay, so 20 marks for question 5. I think that's all, and I forget to update it. Okay, this is the non-current asset and also statement of cash flows. Okay, so I cannot promise that tomorrow we will continue with our paper because we have started our preparation for next year. Okay, I hope we can still finish the 30 sets of questions that I have promised. Okay, I hope we still can finish. Okay, and this is more for my personal challenge as well. Okay, but then we have to see. Okay, because we have so much work to do in these few days. Okay, so let's see. Okay, so see you hopefully tomorrow.